What's up, Facebook? Ty Crandall with Credit Suite here today. We are going to be diving in and we're talking about Dun & Bradstreet. We're actually going to be talking about Dun & Bradstreet credit reports and Dun & Bradstreet credit scores. So this is very important because Dun & Bradstreet, if you don't know who they are the biggest business credit reporting agency, actually the biggest credit reporting agency in the world. Okay, so Dun & Bradstreet was around way before consumer credit even existed. It's interesting because when I talk to people, a lot of people out there still don't know much about business credit. Daniel, good morning. Thanks for coming in. A lot of people are unfamiliar with business credit. They even question the validity of business credit. A lot of people don't think that business credit is real. But the truth is, business credit's been around longer than consumer credit. As a matter of fact, Dun & Bradstreet was around over a decade before the first consumer credit reporting agency even existed. So it's pretty interesting. As a matter of fact, 5 presidents have worked with Dun & Bradstreet in their history. So very legitimate as business credit, even been around much longer than consumer credit. So Deidre, thanks for coming in. Daryl, thanks for coming in. Everybody, thanks for coming in. Thanks for saying hi. If I'm on the right track, share, invite your friends, like. We're going to go through a lot of cool stuff today. So today we're going to decode Dun & Bradstreet. We're going to talk, hey, Jerome, welcome, man. Thanks for coming in. We're going to the chalkboard. I hope you like chalkboards because we're getting ready to get rid of this whiteboard next month, and it's a really beautiful chalkboard going there. Okay, so we're going to talk about necessarily 10 factors that you need to know about your D&B report and why these factors are important. If you want to get a loan, if you want to get credit, you need to know about these things. Arlene, good morning. Thanks for coming in. Look, I had somebody the other day, for example, they responded to an ad that we had on Facebook and they said, BS. They didn't say BS. They said the full word, which wasn't nice. And we said, well, why is that BS? They said, because I'm not able to get a loan and even though I have revenue. And we said, well, the reason you're not able to get a loan is because you don't have business credit established. So this is what a lot of people don't know. If you're looking to get loans, if you're looking to get credit lines, if you're looking to get credit cards, you need to know that almost all credit issuers and lenders are pulling some form of business credit report. Even on deck that deals with high risk revenue lending financing that can be very expensive, still pulls business credit and issues denials based on it. So in order to be able to get approved for the loans, the credit cards, the credit lines you want to get, we've got to make sure we understand how Dun & Bradstreet works, what's on our reports, how what is on our reports works, so you know how to control it. And when you know how to control it, that's the key to getting the money you want to get to grow the business. But it's also the key to getting the most amount of money for your business and at the best terms, as we're going to talk about. We're going to talk about how this is used to determine the rate you should pay, how much money you should get, and whether you should be approved or denied. So Arlene, good morning. All right, let's go to the whiteboard. So Dun & Bradstreet, they are the oldest credit reporting agency. Notice, I do not say business credit reporting agency. Dun & Bradstreet is the oldest. They've been around a decade before the first consumer reporting agency, which I think was TransUnion, although I can't remember, was even around. Now, here's 2 very important things you're going to learn very early in this stream. And a lot of people have problems with this. In order for you to have a Dun & Bradstreet credit report populated, there are 2 things you absolutely must have. You must have a DUNS number in their system, and you must actually have 3 accounts reporting for them to issue you a Paydex score. So many people say to me this, I got credit. It's supposed to report to Dun & Bradstreet. It's not reporting. Why is it not reporting? Well, a lot of accounts do report to Dun & Bradstreet, but D&B will not populate a credit report for you unless you've gotten your DUNS number, which is free. You can go to creditsuite.com/DUNS to get your free DUNS number. You have to have the DUNS number to get a Paydex score. The other you have to have is 3 accounts reporting to Dun & Bradstreet. If you have a DUNS number and you have 3 accounts reporting, they will issue you a Paydex score and populate a credit report. If you do not have both of those, no matter what you do, you will not get a credit report populated with Dun & Bradstreet. So if you got an account with Quill and you say, well, Quill should report to D&B and they're not reporting, that might not be the case. The case may be you haven't gotten your DUNS or don't have the 3 accounts you need to have a Dun & Bradstreet credit report populated. So very important that you know those things. This is the key. 3 trades and DUNS to get that Paydex score. So D&B reports, they basically populate a RADA reports based on information in their database. Okay, and there's a lot of companies they have 250 million companies records on file. Okay, and again, a lot of these aren't active, so only 20 million are active. Here's crazy. Look at this. This is really interesting. Of the 250 million records DMB has on file, 20 million are active companies, 130 million are out of business. So if you don't think that running a business is risky, just look at this. This is pretty crazy. And again, others are in some other form of status beyond out of business and active. But a fraction of the reports they have are active, and many more are actually showing older companies that went out of business. So a lot of information they're going to get. They're basically getting data from creditors. They're getting data from the Secretary of State. They're getting data from public records. They're getting data from collection companies. They're getting data from Yelp, from Yellow Pages. All that kind of information is where these guys go to get data and then populate on your credit report. This is very important. I often say that when you build business credibility, you need to make sure that everything is congruent for your business, meaning your business name, your address, and your phone number need to be listed the same as the Secretary of State as what you put on the application, and that must be the same as what's on Yelp, Yellow Pages, etc. The reason for that is because reporting agencies like Dun & Bradstreet will get the data from Yellow Pages, from Yelp. They pull all of your business information from all of these sources. So if the information is incongruent, then what happens is they populate multiple files for you. And we see this happen all the time, where people have multiple DUNS numbers. Well, how did that happen? Well, it happened because the name and address on your Secretary of State records is different than you put on an application somewhere else, or different than Yelp or Yahoo or these places your business is listed. Remember, in the business reporting agency world, okay, your credit profile is linked to your address and your business name. That's it. It's not even to your EIN. So, for example, if you go to get a Quill account right now, they won't even ask for your EIN, because all Quill needs to be able to pull your business credit report or report data to your business credit report is your business name and address. Here's the problem. If you have a bunch of multiple listings out there with different addresses or variants of your name, it's very common to see multiple DUNS number or credit profiles created under DMB, because Dun & Bradstreet creates a profile for every entity with what they call an independent or separate business location. So you have to make sure that your data is congruent online. Yelp, Yahoo, Bing, etc. If you don't, what happens is multiple credit profiles can get created, and it's more difficult to link them, because every time you call DMB, they're going to want to try to sell you something you typically don't need. LaTanya, welcome. Good morning. Okay, so back to this. So we've got to make sure here that all this information, the industry, the number of employees that we're putting on Secretary of State records, the business name, the address, that all this information is congruent online, because this is all the data that they're coming in here. Tyrone, Nikki, welcome. Good morning, everybody. Thanks for coming in. So we've got to make sure that all this information is congruent. So where do they go to get information? We talked about this. Public records. They're getting liens. They're getting tax liens. They're getting judgments. The IRS, they get liens and tax filing information from. They get it from shared data, from lenders and suppliers, from credit issuers. They're getting it from press releases, Yelp, Yellow Pages online. They're also getting it from the Secretary of State records as well. So a lot of different places that they're getting this data from. Collection filings, UCC filings, or when lenders tell them that you have outstanding loans. They're getting information from the actual government itself about grants and loans repayments and contracts, debarment. Okay, even get federal lawsuits. So you can see lawsuits on your credit report that they're getting as well. Business registrations and corporations, any information from the state or the Secretary of State, and corporation filings from public record holders, shareholder data that's published online. Credit reporting agencies also, again, look online. They look at Google. They look at Yelp. They look at Facebook. They look at your company website. They have these data crawlers that crawl all these places to get data. So you need to know where your information they're getting comes from. Hey, what's up, Stepson? Thanks for coming in. You need to know what data, where they're getting this stuff from, so you know what populates on your actual credit report. I'm going to show you this in a second. But for example, when you file a Secretary of State, when you file an annual report with your Secretary of State, they ask about your number of employees. You may not think anything about that, but do you know the number of employees you have can determine your risk of going nearly bankrupt? Per them, it can. And I'll show you this in a little bit. But this is the kind of information you need to know, because the information you give to the Secretary of State, boom, I fill out a couple things, I file my annual report. You may not think it's a big deal, but literally the number of employees you have in your business that you file on your annual report can determine your risk of going bankrupt per the business reporting agencies like D&B. And I'll show you that here in just a second. Kevin, welcome. Thanks for coming in. So again, a lot of things to know. These are the oldest. They've got a ton of records, 250 million records on file. They get data from a lot of places. The IRS, collection companies, UCC filings, the federal government, state entities, registrations, corporation filings, yellow pages, Facebook, your website. All this stuff can populate on your credit report. And Kevin, thanks for going crazy on the loves. I appreciate that. So let's talk about delinquency predictor. So this is what's called a predictive model from Dun & Bradstreet. Now here's what you need to know. Dun & Bradstreet has 5 main credit scores, and they're tiered into 2 categories: predictive and performance. Performance, how you've performed in the past. Based on the information they have, how have you paid your past payments? Predictive, what they think will happen in the future. Based on the information they have, their algorithms are predicting your risk of defaulting. So all of your scores fall in one of these categories. Either they're predicting based on information they have, predicting what may happen, or they're giving you actual data based on past performance. So for example, the Paydex score is based on past performance. So if we look at D&B's Paydex score, it's based on how you pay your bills. Do you pay them on average 14 days late, or do you pay them promptly? Okay, so that being said, can't bring Alex on camera. Oh, he says maybe he wants to. Okay, so again, what happens here is that you're coming in, and this is based on actual past payment performance. So what this is this is actually a performance score, not an actual predictive score. So delinquency predictor predicts your risk of going delinquent. It's not the Paydex score. It's another score that falls in their predictor category, not based on actual performance. So it's predictive model and scoring. They're looking at your data in the past to predict how you may perform in the actual future. Okay, it identifies risk inherent with future lending decisions for people that are using them for that actual case. And it's basically ranks you based on your chance of going late. So if you're a new company and there's no data, or you haven't got business credit established, then what happens is you are a very high risk of future default because you have no historical data to go off of. You need to know this. It's very different in the business world. In the consumer world, you're based on performance, right? Your FICO scores are based on how you've performed in the past. So a lot of business owners aren't used to this. We're not used to the reporting agencies having no or limited data about us and still issuing scores saying we're really high risk of default. Well, that happens because of these predictive models, which again, we don't see in the consumer world. We only see in the commercial world. So you need to know this exists because, for example, if we look at Equifax and Experian, they will calculate these scores and make you very high risk even if you have no credit accounts reporting. Remember, Dun & Bradstreet needs 3 accounts to populate a report and a score. Experian and Equifax don't. They will give you a credit report and a failing score just because they know that you exist and you have no credit, and they see that as an inherent risk, predicting greater default because you have no credit established. The financial stress percentile, these are important as well. Whenever you see any of the reporting agencies have a percentile score, what it's meaning is it's rating you against other people in your industry, giving the percentile of risk of you over and beyond them. So for example, if you're low risk, it will say you are lower risk than 90% of other businesses in your industry. That's what a percentile score is. So like others, it's also based on your industry, your time in business, these type of factors. Now the financial stress score, your average score, is based on these kind of factors. So again, what we're looking for here is other factors, including even your industry and your time in business. So for example, if you pull your business scores, they will even tell you that you're higher risk because of industry, especially if you have no credit with Experian and you're in a higher risk industry. They'll issue you a failing score with this because of industry. So you want to start building business credit as quickly as possible. The time you have a profile, the time that you have in business, okay, the industry you're in, these type of things actually are actually factored in right here into your financial stress percentile score. So if this makes sense, and again, I'm going to test something new. It may completely bomb and fail, but I want to tell you that if you want a guide that maps this out a little bit more in detail to build business credit, type in the word EIN in the chat. It's something new we're testing. It might not even work. But if you are interested in learning a little bit more about how this process works to establish that initial business credit profile score, you type EIN in the chat. Our bot will engage with you and get you that access. Something pretty cool we're checking out right now. So financial stress percentile. So the financial stress score, now remember, and Herman, let me know if it works or it doesn't work, okay? Because I'm anxious to see. But again, guys, you type in the word EIN in the chat. You should engage with our bot, and our bot will help you even get a really cool guide on building business credit. So financial stress score, different here, right? Financial stress percentile is comparing you to other people in your industry. The financial stress score is your actual score, not comparing you to others in the actual industry, okay? So this predicts how likely your business is to fail, i.e. go out of business or go bankrupt in the next... Alex is telling me that the EIN thing is not finished testing yet. So for those of you that typed in EIN, next week we will get that fixed. My apology that that's not working just yet. So this predicts how likely you are to fail, go bankrupt, go out of business in the next 12 months. Ask for legal relief from your actual creditors. Stop operations. Voluntarily withdraw from operations. Look, I don't need to say this in a bunch of different ways. Basically, you're going out of business is what this predicts. 1001 is the highest chance of failure. 1875 is the lowest. This is that score range. 1001 to 1875, the higher score you have, the absolute better with the financial risk score. So again, they're looking at a lot of data, including trade lines, including time in business, including industry, including past payment history, including financial data to be able to calculate that score. The financial stress risk class, which determines which of these classes you're in with this, is 0 to 5, with 1 being the least likely and 5 being the most likely of filing for bankruptcy, of going out of business. Now remember, there's also a financial stress score percentile here, okay, which basically compares you to others in your industry with risk of defaulting. Thanks, Robert. Thank you very much. Okay, so look. Here's one of the things you need to know. Your DMB rating is based on it, so I'm going to talk about this a little bit later. DMB will create these scores based also on financial data of your business. Very important that you know this. The financial data comes from your tax returns, but it's you that determines whether you send them your tax returns or not. Here's the way it works. If you send them your tax returns and the tax returns are fairly good, you're going to be lower risk on the financial side of defaulting. This isn't just one score. They have multiple scores that take your financial data into account. Kevin, thanks for going crazy on the likes. I appreciate it. So they have multiple scores that take your financial data into account to determine your risk. So here's what you need to know. You can send them your tax returns or not. But if they don't send your tax returns, if you don't, they go based on the number of employees you have. So if you haven't sent them your tax returns and you have less than 1, 2, 3 employees, they see you as a very big risk of filing bankruptcy. Okay, it adversely affects your score. So if you have tax returns and you're growing, send Dun & Bradstreet your tax returns. It will help many of your scores improve. It's one thing you can directly control to get better credit scores. Why? Send them your tax returns. If not, Focus on what you file as the number of employees you have on your annual reports. When you file that with the Secretary of State, what happens is that will then determine your risk of default. So no tax returns, limited employees. That's going to mean that your financial stress class, your financial stress score, and your percentiles are all reflecting a higher risk of bankruptcy when they don't have tax returns and they also do not have or have limited number of employees. Now, Alex is testing the EIN to see if he can get it up and working. This is called your SIR rating. It's a supplier evaluation risk rating. So what this does is, one is the most likely to fail.